August 31st, we're going to do some live trading, and we're going to be offering the high-level mentoring. In the class, we're going to go through all of the things that I look at, how you can put the odds. All this is doing is really putting the odds in your favor. You know, you don't have to overthink any of this stuff. You don't have to analyze it. You just look at the picture. You say, oh, CHI is down 20 cents. We've got a butterfly. We're going down. That's it.
All right. Good morning, everyone. Dan here with Tradingology.com in the Trading Room 4. What do we got today? We got August 12th, 2021. We got a Thursday, so we're definitely going to be covering the new unemployment claims. We'll check that out. As usual, we do have Dave joining us from the Strong Market team. So welcome, Dave. Happy Thursday to you.
Happy Thursday.
Look at that. Dave hasn't changed. He's got his awesome yellow shirt on again. It's famous.
You know, I was just going to mention that. You know how many yellow shirts I have? Exactly the same one. I literally have 5 of them in my closet.
That's awesome. I like it.
That's why I don't have to change. Just like Steve Jobs, he always wore black, right?
Exactly. Good morning, Tom. He says he's multitasking. He's going to be listening with one ear, but he likes it. All right. So starting off the day, it looks like we got a little bit of downturn. Dow's down. NASDAQ's the only one that's green currently, but it's just barely holding on. We'll pull over the chart at the moment. We had a big drop in the NDX, but it's fighting back. But it is definitely a bearish setup for today. So maybe we'll get a bounce off of this support resistance line here. It wouldn't surprise me one bit to see bearish hurting filling out. We got supply, demand, and strength negative. So this most likely is a false start. Trustworthy of any rally right now with bearish signals.
Well,
the other thing that we've noticed too. Go ahead, Dave.
There was a tell, and this is something that we're going to be covering in the high-level mentoring class. August 31st, we're going to do some live trading, and we're going to be offering the high-level mentoring. There was a tell that is not in the spreadsheet. It's in one of the indicators. In fact, it's the indicator that we have, the Market Timer XL. If we take a look at that on a daily basis for the NYSE, if you could pull that up, it's something I call a butterfly pattern. It works almost every single time. And here's what happens. There's a pattern called a butterfly, and I use it all the time. Typically, this goes on below because it's an indicator. It goes below the Dow, but you've got it in a separate chart, which is fine. You see those 2 green peaks?
I'm gonna grab this guy.
Yeah, that one and the one to the right of it. What do they look like?
That's the butterfly wings right there.
Butterfly wings, exactly. Whenever I see that, I typically go short the market for the very next day, and that's exactly what I did today.
There you go. One quick tip.
You can go back. The nice thing about these indicators is because the Market Timer XL is one of the first indicators that I developed back in 1992. I drew it out by hand on graph paper back then, but now you've got it. Boom, you can see it right away. You got it updated, and you can go back in history. You can go back to the 2000s, the 2010s, the 2008s, and you can see that exact same pattern over and over and over again. It sets up for the next day. If you're a swing trader, it's one of the best indicators that you could possibly have.
I think we should call it the X-Wing indicator or the X-Wing pattern.
Oh,
I know you like butterflies, but
we'll get
our techies in there.
Yeah, nice.
It looks like a TIE fighter. Sorry, TIE fighter, not an X-Wing.
Okay. Well, you can call it whatever you want. It works.
Yeah, I don't look at the daily enough on this indicator, so that is fantastic. And like you say, it's a daily chart. It's not like, hey, if you miss it, you look at this after the close yesterday, you can already see it forming because it would have closed down here. And then today we're bouncing right up.
Yep, that's exactly what happens. And this is just one of the indicators that we have. We have obviously a lot of indicators, but I'll go through my daily process of looking at all these indicators at the end of the day, at the beginning of the day, and I'll show you exactly what I'm looking for in order to have the proper setup. If you don't have the proper setup, you're not going to make money. You don't know what's going on in the market. You need to know what's going on. The other indicator I'll give everybody for free today, that was one of them. It was a little towel about what was going to happen today in the market, or at least this morning. I mean, we could turn around, who knows? The other tell is CHI. I watch CHI constantly. Well, yesterday, CHI actually opened up. And so when we had a little bit of weakness in the morning, I knew it wasn't going to last. And so the market blasted off and went higher after the open. Today, CHI opened up down 19 cents, which was a huge move for CHI. So I knew that weakness was really going to come in, and I piled on the contracts, the futures contracts on the short side, and it worked out beautifully. So that's another tell. So in the class, we're going to go through all of the things that I look at, how you can put the odds. All this is doing is really putting the odds in your favor. You know, you don't have to overthink any of this stuff. You don't have to analyze it. You just look at the picture. You say, oh, CHI is down 20 cents. We've got a butterfly. We're going down. That's it.
Yeah, that's leads right into, someone asking me, well, I've been in the previous year's classes, back in 2017 and 2018 when you did this, Dave, and they're saying, what's going to be different this time? So I think that's a big thing is, some of the indicators that are being used now, because we're 3 years later, basically, since the last class is run, there's been new developments, there's new strategies that we're running, there's new patterns that you're watching for. And I think also, obviously, going through those historically, I wasn't in the live ones, but I saw them after the fact, was, a lot of it was focused towards options because a lot of people wanted to do options trading, but we're doing a little bit more futures trading, I think would be fair to say, as well as position trading and swing trading with individual stocks. I think is more of both yours and my focus, just based on the market and taking advantage of what's there when we can use that edge that we get with the indicators that strong market has developed over the years. When anything else you'd like to add to that? Because that's at least the way I see it.
No, that's absolutely true. I think that probably, like I said in the first HLM classes, was that this is the car engine. This is how we take it apart piece by piece. And so I gave them everything they needed to know about volatility. Volatility is one of the most important aspects of the market, especially for a retail trader. We looked at everything. We took it apart, we put it back together again, and it was if you wanted to get a degree in volatility, that's what you would take. This is going to be much more simplified. So we're taking the best of the indicators that have been proven to work over the past year since we did HLM, and we're going to simplify the process of making decisions about whether you should go long or short, and what areas you should go short, and where you should take your profits, where you should get in and set your stop losses. And we're only going to we're going to go through our actual daily routine. What I look at, what I do first, what I do second, what I do third. And then you make a decision. And some days you don't, you just don't do anything at all. Other days you're going to say, I'm going to load up, like today. I loaded up. And you put the odds in your favor. So it's a simplified version of HLM. We're not going to go into, taking apart the engine, putting it back together again. In this one, we're going straight for the money. We're going to say, this is what you got to do. Make money. You want to make the most money possible trading. This is what you have to look at. And that's your setup for the day. You're focused on that one thing and one thing only.
That's fantastic. I think that'll definitely help people that have those questions. And Tom just chimed in. I'll read it off for him here. He said he was part of the 2017 and 2018 classes. And Tom has also signed up for the 2021 class that is starting August 31st. He says, both of you, Dave and Dan, have gotten better and refined things. My observations as a longtime customer. I also think this is going to consolidate my knowledge and will probably fill in a lot of gaps. The phrase no-brainer gets overused on online marketing, but this course is a no-brainer. So those are words directly from Tom. So I appreciate that, Tom. Thank you. And I'm looking forward to you. Tom was absolutely our first guy in the door. So he was the early bird. He's getting the worm. So thank you for the kind words, Tom. And yeah, looking forward to it. I think that's exactly it. It's more of the, not in the weeds, but like Dave just mentioned, we're getting right to, hey, here's what we work. And I think that's one thing that gets lost in the translation sometimes, where in the past I've recorded like, all right, here's what I do, like literally opening up TOS, getting things set up, just getting things sized. than looking at the right things. I've had people say that's exactly what I needed because I have no idea where to start. I think a lot of people overcomplicate things and they try and, they force trades, or they say, oh, this has got to go, or they get a gut feeling versus going off of data, and they make bad choices, which we all do starting out. It's like, yeah. So that's part of it too, is learning from what mistakes we went through over the last 50 years of combined trading and trying to save you guys from those mistakes, and just showing you that what we do, what we go for, what we look for, and when we don't trade, when to stay away.
Right.
That's sometimes the best trade as well, is to not enter.
Yep.
That's hard for new people.
That's absolutely right. And so, and also if you do take the August 31st class, you'll get, right, you're going to get all the old high-level mentoring courses that were recorded. And if you wanted to go in and try to take the engine apart and put it back together again, you can do that. But what we're going to focus on in this one is just a very, very, hey, this is what we do in the morning. This is what we do at the close. This is what we're going to do for the setup for the next day. And this is how this is the, I'm not going to call it, I'll call it simple, but it's not easy. It's simple though. It's very simple. So we're simplifying the entire process of making money by trading. And, hey, that's what we want to do, right? We want to try to, we don't want people to get confused, like you said, of trying to figure out, well, what do I do first? What indicators should I be looking at? And what do each one of these indicators mean? And then in their head, they can put this together and they say, oh, the light bulb will go off. And they'll say, that makes sense. That's what we want to do. We want that. We want everything to make sense. And that's the goal and purpose of this new mentoring class.
Yep. Get that aha moment. Absolutely. Tom says, piping in one more time, he says, I see the value in those old courses. If nothing else, they show how the system has developed over the years. Absolutely. Especially when you start to look at the market timer system, you get to see the original spreadsheets that Dave had that built 5 years ago, and you see the evolution of it over time as it turned into market timer. So you actually understand where things come from. So yeah, if you're a guy that wants the nuts and the bolts, you're the engineer, you say, yeah, how does this thing work? You can go back. That's one thing that we hadn't announced yet, but anybody that does sign up to this one, if they don't have access to any courses in Tradinology, they will be elevated to the highest level. So if there's anything you're missing for courses, like you've gotten the target hunter strategy, but you don't have something else yet, or you're silver only and you're looking to go to gold, anybody that's a new registrant for this one will be elevated to the top level, and you will have access to everything in Tradinology from the courses perspective. So that is absolutely one thing that we're adding on to people as another bonus for people that are signing up, because we want to give you guys what you need. That way you can say, hey, instead of us rehashing everything about volatility arbitrage and the engine, you can go back and revisit it too, because it's still valid. Everything still makes sense, and the core roots of where it all came from. So that's a good point, Tom. So thanks for bringing that up.
Absolutely. I mean, every market, nothing is static. Things change all the time, and you have to keep up with those changes. And that's what we've done over the years. We've kept up with the changes. We've made tweaks and changes to our system. And so you're going to be getting the latest. I mean, just between 2018 and 2017 and now, I've had to make changes. We make them all the time. I don't know anybody in business that doesn't make changes in their business. If you don't make changes, you're a Blockbuster, right? I mean, think of how it changes. Blockbuster had a perfect, they had a great opportunity to get into the digital streaming services. They could have been Netflix, but they didn't. They stuck with their VHS tapes, and they went out of business. So we have to constantly evolve as traders. If we don't, then you're going to be left behind. You're going to be more confused. And if you're confused right now because there are so many more indicators, there are so many people talking about different systems, and you're not sure which one to follow, or you're not sure which one makes sense, I highly suggest, and we have been doing this, like you said, for a combined 50 years. Really, truly, honestly, 100%, we can tell you and we can show you how to save money, not blow up your account, and make money at the same time by looking at the right things. We're going to simplify the process for you, and we're going to focus on the money. Where's the money?
And we're even going to learn from each other. That's the best part too. There's little things that you do. There's little things that I do. We all learn together. It's an awesome community that we're building here. So as always, I still have to thank you. So you started this, we're keeping the ball rolling.
Yeah, my pleasure. I started trading in 1976. So I've been doing this for a very long time. Options in 1987. In fact, I made a post in the Slack channel. I don't know if you saw that in the real-time update service this morning, where the market this year reminds me very, very much of 1987, the summer of 1987. I started trading options in March of 1987. I had about $16,000 I had saved. I was a young guy, just tried. I had a part-time job. I think I made $16,000 a year at that time. And I put together $16,000 in savings, and I was putting it all into the market, and I was doing bull call spreads. I was making like $1,000 to $1,400 a week with long call bull call spreads. And it was absolutely fantastic. I got my account up to about $30,000. So I nearly doubled it in like about 2 months. Then I saw some weakness come in. Okay, so very similar to today's market in 2021. We saw January, February, March, the market starting to climb a little bit. We got a little bit of weakness in April and May. And that's exactly what happened in 1987. So I went short. In fact, I thought the market was going to crash, and I made a very big bet. I bet everything I had on puts in the market in 1987 in July. And
when did they expire?
This market is going down. Oh, I don't want to relive that history. But yes, the puts expired in September. And then, of course, in October, we had the biggest drop in the market in history, one-day drop in the market, 1987. We're down about 50% over a 3-day period. But this reminds me very much like that market. We keep kind of pushing a little bit higher. We had that weakness in April and May, and then we kind of come into the summer months where it's slower. One of the old time adages of traders is don't ever short a dull market. And basically what we have here is a very dull market. We just kind of been grinding higher every single day. But I think we're going to get to that point in the fall where we could have a really big sell-off. And that's another reason, I guess, you might want to join the high level mentoring program, is that we're going to be talking as well about the current market, of course, because that's where we are. And if you want to position yourself for a big sell-off or a big melt up or whatever's going to happen, we're going to give you the tools that you need in order to make that assessment.
Yeah, if you have a portfolio of other things you're invested in, what's the best way to protect it? Should you get out of it? Should you get in? Different things like that. And it goes right with risk management and money management. That's one thing David mentioned. We were talking offline, is some people lump that together. It's absolutely a separate thing. We're helping you with both of those topics.
Right, exactly. Now, if you want to go out and you want to go to some of these other gurus that only show wins and wins and wins and wins and wins and wins and wins, yeah, knock yourself out, lose your account, blow up your account. Probably going to happen. But if you want real world experience, hey, I tell you about my losses as much as my wins. And that's real life. You're never going to win all the time. Hopefully you don't lose all the time. We're going to try to help you win more than you lose. That is the goal of trading.
Absolutely. I should mention, since we showed it early, remember that line on the NDX?
Yes.
Look at what happened.
Look at that.
Went right to it. And then the NQs took a nice little turn. Not that 15,050 down to, that's 20 ticks there. Big move. Little short-term one there. Tom probably grabbed that. No, I bet you Tom did. Tom's not doing NQ anymore.
Yeah. Yeah, I think he learned his lesson about the NQs.
He
Yeah.
says, ouch.
Yeah, ouch. Anyway, guys, yeah, we've got some interesting things coming up in the market. I didn't see anything on the calendar, did you? Besides the PPI, I think the PPI came out this morning. Yesterday was a CPI.
Yeah, CPI yesterday, then unemployment. This is kind of an interesting one. This is a first. It was unemployment claims. Obviously, it is Thursday. They had 375. They actually hit the nail on the head. 375.
Yeah, but you know it's going to be revised.
I was just going to say, let's see what they revise it to. If I expand this guy out, let's see what happened from last week. We were 385, went to 387. So 9 times out of 10, the revisions get higher. So that probably won't stick. But yet alone, what's still the headlines? They're falling for the third straight week. CNBC,
375,000.
Bloomberg dropping 3 weeks in a row. That's all they say. They get there.
Yeah, 375,000. Those are recession level numbers.
Right.
Those are recession level numbers. So it's like, how can they?
Now they've reset the bar. The bar is now 1 million. If it's below 1 million a week, then it doesn't matter.
I didn't get the memo.
Yeah, it's in that 2,700 page double Bible infrastructure plan.
The other thing too is that not only has the market changed as far as the technicals go, but it's also changed because it ignores fundamentals completely.
Right.
Yeah, so you can't trade based on fundamentals. I was listening to CNBC this morning, and there was a famous short seller on there, and basically he's saying, why short? People are like questioning. There's short funds, hedge funds out there that are questioning whether they even have a place in the market anymore. Yeah. There's just no need for them.
That's amazing.
Yeah, it is.
So we'll probably get close to wrapping it up, but yeah, there's that drop on the NQ. Looks like they're bouncing off some levels, so keep your eyes on that. And one thing I did notice too, I should pull it over. It was only here for a second, is the spreadsheet for the Dow. Ill-formed herding. That's almost like, I wouldn't call it a bull trap, but that's like the smallest mouse little trap. Maybe it's a mouse trap with one in between.
Yeah, that's a good one. I haven't thought about that. Yeah, mouse traps. Yeah.
But really low AVS on we're down around 1,000 and under 1,000 on the NASDAQ. So that's an interesting thing I've been keeping an eye on too, where we're getting less and less activity. So like you say, the melt up is kind of pausing and slowing, but lack of herding everywhere is really weird. There's no major force. So we'll see what turns out the rest of this week if we get anybody in line.
Well, that's the indication of a dull market, really, when there's no herding.
Exactly.
So,
on a short-term basis, we see it right now where it's filling out 1 through 6 on both the NYSE and the NASDAQ. That's on a short-term basis. If we bounce this to a daily chart, we don't see that.
Right.
That's more the intraday signal. Right now we have one, so it's actually bear right now. We got the first column. We'll see if that lasts throughout the day. That could be the start of a new adventure. We'll bring that by. I get good at my zooming and moving. Every time I switch to the dailies, there we go. So what are we down? We're down just over 100 points right now. And first column bearish herding right now is filling out. So it's new sellers are coming in. We are close to institutional selling levels at a -9. So keep your eye on that. And with that, we'll probably leave you. Thanks for coming on late, guys. I had a late start, so appreciate the adjustment and the flexibility, and have a great weekend. And we'll just leave you with this. Training won't be around forever. The doors will be closing. Registration is going to close because we want to keep it tight. So if you're on the fence, I'd say don't hesitate. If you got any questions, shoot us an email at support@tradingology.com. We will get your questions answered.
Yeah.
Tom, thanks for everything. Go ahead, Dave.
Yeah, we're going to do one class, 5 weeks, 10 sessions. We only want to have, we're going to cap it at some number. It's going to be under a dozen people. We want to try to really keep it very, very intimate and kind of, between us. So it's going to be relatively small group. And once we hit that number, registration's closed.
Tom, you take care too. Have a great weekend. Hopefully the skies are clearing and the smog's moving away from you out there in the trouble areas. So
Yeah,
better skies for the weekend.
definitely. All right, guys, have a great weekend. We'll see you Tuesday.
Take it easy, Dave.